Microsoft has reported third quarter earnings of 60 cents a share. Investors were expecting 57 cents a share, so that's a pretty substantial beat there. Maybe we can see what the after-hours trading is doing. Clearly, they really like that, and earning a penny there at about 31.03 in the aftermarket there, so pretty impressive. 2%. Okay, sorry, 2% in the aftermarket. Pretty impressive jump there. So we'll come back to that. As I said, stocks in general having a soft day today. We got Matt Jarzemsky on the set to tell us all about that. I'm sorry, Chris Dieterich. Okay.
Why did you change your name?
We both have strong frames, so I can see how.
My apologies. It said Matt on my schedule here. Anyway, Matt, Chris.
Yeah, that's right. Look, we got another soft day, and I think what's starting to happen is Dow's down for a third straight market, and we're having a little bit of nerves, some anxiety getting back into the market. We have a little bit of soft economic data,
so
as
down,
well as
down
concerns.
60, down 68, down 23, and then we'll get the S&P in a moment. So, I mean, pretty weak, down 8.
That's right, but it was worse. The Dow was down as many as about 130 points. Sort of started selling off in the afternoon, so paired some of that. But we were up as much as 50. So we're starting to see these swings again that we had end of last year that were really the hallmark of some of the volatile trading.
And that we didn't see in the first quarter of the year when the trajectory for the market was up. The one thing that jumped out at me in the last, I'd say, 2 weeks of trading is that some of the big names in high technology, whether you're talking Google, Apple, or even Microsoft, which just reported results, all have traded to the downside recently, all down about 3 or 4%. And if you don't have that leadership from these significant names, you're going to pay a price for it.
That's right, and even on a smaller scale today, right when the market started to take a dip down in the early afternoon, it was that there you saw Apple moving in tandem. So there is that maybe a loss of leadership that is kind of leaving. People kind of letting the market come out of steam here.
And I've seen some suggestions that say, investors who are anticipating Facebook's IPO, which may come in the next month or so, maybe raising some cash in some of the technology names. It makes sense if you're looking forward to a high-tech, to making a high-tech purchase, you'd sell some high-tech. Do you run across that in your conversations?
Traders haven't spoken about that with me specifically. I mean, it seems likely if you're looking to expand, incorporate Facebook into your portfolio, maybe you're going to lighten up on Apple, especially after such a tremendous run. So I mean, we could have some of that going on as well.
Chris, let's get back to the housing, okay? Because people have been saying, oh, the worst is over for housing. It's less worse. It's less worse. It's going to be okay. And now we get today some pretty weak numbers on housing. What am I missing? I mean, housing, there has never been a recovery in the U.S. economy since 1945 without a robust recovery in housing, and it still hasn't arrived. So
that's right. I mean, a lot of the sort of enthusiasm has been muted, but maybe there's some thoughts that housing prices have bottomed. Maybe we're starting to see a little bit of an improvement. So maybe that we're at the bottom. And today we get new home sales, falling again. So it's again kind of a slog. And again, from the labor market, we have weekly jobless claims falling. The 4-week average that people track is now the lowest in 4.
Yeah, but let's be fair though, it did fall, but based on a revised higher number. So, and we're finding this every week, and Paul Vinny has pointed this out, is that every single week, last week's is revised upwards. Last week's new.
And there's always volatility in the labor.
But they never revised the downwards. They just haven't been. I mean,
they're almost never. But there's always a lot of volatility, especially in these weekly readings.